Welcome to Global Financial Engineering. I'm Dr. Glen Brown, and yes, welcome to another session of the Global Weekly Video Commentary. In this session, I want to look at Apple. And we have seen um, many of these stock recover from previous low, and maybe there are many questions if this is another bull run. It can be dangerous to follow the crowd. And therefore, in this session, I wanted to use the global complete moving average trading system that we have developed over the last 4 sessions to see how we could use it to get an idea or to create our hypothesis. There's nothing that is guaranteed in this business, but we want a framework in which we can operate to aid our decision-making skill. So when I look at Apple, I want to show you how I would do it if in case I decide to enter any additional position on it. And I want to look at it from a big picture approach. But before we get into the most exciting part of it and the practical aspect of it, let's do our housekeeping by bringing to your attention the risk that is involved in this type of business. And yes, it is a business that can change your life. Depends on your approach, depends on your attitude. It can make it better or it can make it worse. Let's look at our risk warning. Again, nothing here in this video should be deemed as investment advice. This is for educational purposes. Okay, so let's look at our general risk warning. As usual, I'm going to pause the screen and allow you to read through this. Okay, we have included most of the requirement of disclosing to you the risk involved in the investment world. And as we go through this lecture, I will draw upon some hypothetical trading, and we want to also disclose the CFTC ruling on that. And please remember, past results are not necessarily indicative of future results. So pause the video and go through this, and then I will put the other section of it on screen. I will do the same. Okay, so I hope you have completed down to here. I want to take up the additional section. So yes, you can pause the video to read through this. Going or continue with this lecture is based on the assumption that you understand the risk disclaimer and accept it. Okay, with that in mind, let's head over to our chart. And those of you who might just be joining us, I mean, maybe this is the first video you are seeing, I'm going to recommend for you to go to video 1. Because in that video, we start from scratch, building what we call the Global 821 Advanced Strategy. And then in further session, we put on some additional tools on it to guide us. And hence we are going to use what we call the Global Complete Moving Average Trading System. Okay, so let's up over to our chart. And here I'm going to look at Apple, and I'm on the 4-hour chart. Those of you who start off with the basic, you'd have noticed that we use MetaTrader 4 as our platform, but you can configure the system on any platform. Okay, so you can just go back to video 1, 2, and 3, and you'll see exactly how that is constructed. You can also do it on Yahoo finance as well. All right, so let me look at this again. For our framework, we aim to take 4 types of trades: micro trend trades, short-term trend trades, medium-term trend trade, and long-term trend trade. We split the time frame to denote the types of trades. So for example, on the 1 hour, which would have been our Saturday 5, we trade in the direction of the short term. So any trade executed on the 60 minutes at the 1 hour is deemed as short-term trade. Any trade executed on the 4 hour is deemed as medium-term trend trade. And any trade executed on the daily is deemed as long-term trend trade. Anything below the 1 hour is micro trend. So 30 minutes, 15, 5, and 1 micro trend. So if here we talk about micro trend trade. So for example, you might see sometime we might be at our pivot time frame, which we call the H4. We like to sit here and look what is happening in the market. And if in case, let's say for example, I see a 825 or 821 cross on the 4 hour, but the market structure on this time frame is not bullish, and I want to take that bullish trade, I can move down to the short-term strategy, or I can move down to a microtrend strategy. There's a major difference because each trade have different risk model to ensure we don't risk too much on our account. Okay, so let's look at Apple. We have seen, going back to my extreme left, we would deem this to be a bearish market structure with some level of consolidation. Because you'd have seen the red is the 200, the green the 100, and the blue the 50. So if we take just these into account, the red on top of the green on top of the blue, this is a bearish market structure. However, the 8 and 21 moving average pull up into the 50, 100, and 200. So we have what we call a rally in a downtrend, like a bearish rally in a downtrend. Okay. In truth and in fact, I would not take a buy here. So if I would look to get a trade in direction of the market structure is bearish, so I would prefer to take this short. Okay. Now I want to go back to the last trading day now and look exactly what is happening and how we could trade this. Looking at this, the market structure is bearish, although we know that. Remember, bearish market structure is when the moving averages is orderly in the following form from top to bottom. We have red, green, blue, magenta, and aqua. So this is bearish. What we have though is a potential reversal. This is what we call the 821 cross. For those who want to trade the basic 821 strategy, then yes, you could say you are going to take this trade based on that. But if you adapt the global complete moving average trading system, you don't need to break the rule here. We could still take this trade. Let me show you how we could take the trade. This is the 821 cross on the 240-minute chart. Normally when this happens, for you to get a bullish market structure to correspond with this, it's normally a micro trend trade. So the first we can do is to go below the short term, which is the 30 minutes, and see the alignment. When we go here, we note that yes, we have a constructive market structure, but this was not 100% bullish yet because the 200 was on top of all the other moving averages. If you believe in that 821 cross and you need it, it means that we need to drill down a little bit more. So I would have possibly go down to the 15, and yes, on this 15 now, I would get a signal to correspond with that 825 cross. So those of you would have technically entered, and let me assume it's somewhere here, so I'm going to put this in white. And just bold it for identification purposes. So let's assume you enter here. Now we'll look at our risk model. When you enter, you must know where you are going to exit, where you're going to get out. Okay, why? The truth is, while a strategy might be successful over a period of time, there's going to come a time when the strategy experience abnormal market condition. There are times you're going to get false signals. You're going to have fake breakouts. How do you know when you're wrong? You must use a stop loss. We at Global have designed a methodology, a framework, a risk management framework. I'm not going to go through all aspect of it because the truth is it's already incorporated into the global algorithmic trading system. But for here, we want to give you something you can use. So this is what you do. When you enter, when you decide to enter this trade, your stop loss must be 9 times the average true range. So if I am going to enter right here, let's go and look on the average true range indicator here. The 0.45 is going back to the last day. So what I do is just identify where the vertical line intersect this, and I see 0.4793. So 0.4793. So my stop on trailing, initial trailing, will be 0.4793 times 9. I'm not going to go into the mechanics of how I get that 9 later on. It's possible, but not now. So I'm going to assume that we're going to enter at 131.31. Okay? So enter at 131.31. Let me show you where your stop would have been. Let me show you how you compute that. As we don't want we don't want our commentary to be just like talking heads, okay? We want this is serious business. Okay, so what you do on the entry, which is 131.31, so we go 131.31. The stop going to be below, so we're going to minus the multiple of 9 times the average true range. What did we say the average true range again? Let me just check that to make sure. We see it was 0.4. Just put the mouse on it. 0.4793. So we're going to multiply that by 0.4793. Close the bracket. So you are using a trailing stop point of 4.3137. Okay. So your stop loss is 126.99, or we could say 127. If you just run, we can run it up to 127. Okay. So what I would have done then is I could do this. I want to get another horizontal line just to show you this. You could put it anywhere. I'm going to possibly use a purple for that. Okay. And the parameter for this going to be, what do you say, 126.99. So 126.99. And I just enter. And it will definitely fall because this is 127, so 35, so we're going to fall below this. So this is enough for your stop. The reason being, you must give the market room, okay, to experience counter trend trade, what we call a correction, without hitting your stop. So we believe that setting a trailing using a multiplier of 9, and this is different from a fixed stop, because what happened here, when this market moves in your direction, the stop loss will start to rise. So let's go back and see where we would have reached then with this. You'd have seen where we enter, and now you would have noticed that our entry was here. So we enter at 131 and the price is now at 137.23. Okay, we could go back to our H4 and this will show you exactly the position of the stop loss based on strategy number 3 that run on the 15 minutes. If we look at this, we would have entered the trade on this 825 cross, but our stop loss, instead of using 9 times this average true range, which is nearly $18, the average true range of the 15 minutes is different from the average true range of the 4-hour, and this stop is more appropriate. So we take the 821 cross, for those of you who use 825, and the 4-hour by drilling down to the 15 minutes. And this will allow us to trail nicely. Now what you look for? We are in a resistance zone now. I believe that looking at the relative trend index at 64 and the stochastic above 50, we should see enough momentum to break above this level. But we still have to be very careful. Very careful. Note carefully though that this is technically a fixed stop. As the market moved up, you would have possibly moved this above break even already. So the risk would have been already removed from the market. Because if you look on the distance, if you look at that stop distance, which was 0.4793 times 9, let me do this again to 0.4793 times 9. It was $4.31. We would have moved from this entry more than $4.31 already. So how to know where the stop would have been? We could take the high and subtract that from it. Okay, so I could just go here. This was the highest bar since we enter. The high of that bar, just look at the bottom here and you'll see the high. So put my mouse on this. High is 138.23. So I could go back to this and subtract 4.3137 from it. So come again. The high is 138.23. I want to get a negative. I can just put 138.23. So minus 138.23. Don't worry about the negative sign. We'll just ignore that. So it is 133.91 technically. So I could move this up to 133.91. 133.91 and bam, see that? We would have been, oops, no, it's the wrong one to move. Okay, so it'll be this 133. Let's go back. 133.91. So we have entered 138.23. Okay, well, this is what we need to move to 133.91, the stop. So change it to 133.91. Boom, you'll have seen that we would have been above our entry and locking in profit. This is what we have called the secured unrealized profit. It have not yet closed, but if market pull back below the 50, it will have stopped us out. But let's go a little bit deeper into this analysis. Because if you look, as we said before, we are taking a counter trend trade against the primary downtrend on this time frame. I could get a bigger picture of any potential resistance. So these are what they call overhead resistance. We can use these lines as support and resistance. So when price is below it, the line becomes resistance. So my overhead resistance right here is 142.18. But let's look and get a little bigger picture of what does that mean by going to the daily. If you look at the daily, we still have not crossed over the 50. And this 50 was provides strong resistance before. We could look and see whether or not we have any strength in this trend. Well, we're above 50 of the RSI and above 50 of the stochastic. But of importance, while we could get more encouragement here, we are now experiencing an 825 cross on the daily, which is a bullish signal. And then I can go to the weekly to get even a bigger picture. Now when I go here now, I'm a little bit more cautious here, because the truth is this: we are technically just coming above the 8th EMA, and the 8th EMA turns sideways. That means there's some level of consolidation. Of concern to us here, though, as well, is that the RSI is below 50, and the stochastic is also below 50. But we are okay to take that micro trend trade based on the risk model that we use on strategy 3. Why do I call this strategy 3? Well, we consider anything executed on the 1 minute to be strategy 1. Anything executed on the 5 minutes to be strategy 2. Anything on the 15 minute strategy 3. Anything on the 30 minute strategy 4, 5, 6, 7, 8, 9. So on the MT4, we have 9 default strategy. This leads me to the end of this another session. I hope it was informative, and I hope you learn a little bit here. As we continue, you will learn more.